Joining me right now from Capitol Hill, House Financial Services Committee member, Republican Congressman Roger Williams of Texas, along with House Financial Services Committee member, co-chair of the Bipartisan Problem Solvers Caucus, Democrat Josh Gottheimer of New Jersey. Good to see you both, gentlemen. Thank you so much for joining us.
Thank you, Maria.
I want to kick it off right now, Congressman Williams, with this trigger in case growth doesn't cover the cost of tax cuts. What's your take on this? So a trigger is in place if you don't see the kind of revenue that you have been talking about from this tax plan. A trigger goes in and tax rates go up. Good idea?
No, I don't like it at all. You know, as a business person, I think it's wrong. The problem is we need a trigger to, if we don't reach certain thresholds, we need to cut expenses. We don't need to raise taxes. I mean, we're talking about tax reform, for crying out loud, and we don't need to tell American people and small businesses we're going to raise taxes, because that will literally stop long-term planning. If we're short, we need to get it through cuts in the federal government, massive cuts in the federal government. That's the trigger I would support.
So that's a great point, actually. So where would that be? What do you cut? Because we're talking about this every morning, and it just seems like there's no money around. You're trying to get $100 billion here and $100 billion there, scrap together some money to pay for this corporate tax cut. So what would you cut in spending? You just did a $47 trillion budget over 10 years with virtually no cuts in spending.
Well, there's a lot of waste, fraud, and abuse in Washington, and a lot of people just don't want to cut. But I can tell you, people listen to your show in Main Street America. If they're short $1,000, they find $1,000 to cut. We can do that up here if we have the desire to do it. So there are plenty of room to cut, but we don't need to be raising taxes and at the same time telling people we're cutting taxes.
Representative Gottheimer, let me turn to you. What's your take on this tax bill?
Well, I agree that we don't need to be raising taxes, which is why, coming from New Jersey, you know, this is a huge coal in our stockings over Christmas. It's going to be a huge tax hike on New Jersey and the Northeast. Obviously, by eliminating the state and local tax deduction and property tax deductions, we're facing a huge tax increase in New Jersey over this. And at the same time, of course, we're loading up the deficit here and going to add to our national debt. So there's no fiscal responsibility in this bill. The only thing I'm seeing are tax hikes, which is why I can't believe we're facing this and what they're going to do and gut my economy in New Jersey.
Wait, well, Congressman Gottheimer, let me ask you about that, because much has been said about the certain states that are so-called donor states, which are giving more to the federal government than they're actually getting back, whether it's New Jersey or New York or Connecticut or Illinois, California, the biggest user of that state and local deduction. SALT, 6 million Californians are using it. One other category of so-called federal spending, though, in the states is retirement benefits, right? I mean, 3/4 of which consists of Social Security. Included are payments to veterans, retirement benefits to federal workers, disability payments. These are the largest classifications of funds flowing to the states. That's a big reason why the blue states are faring poorly in the total accounting of the federal dollars, isn't it? It's not apples to apples, because your state's also getting a lot in terms of these kinds of benefits.
No, listen, there's going to be, of course, you're not going to mess with people's Social Security, and I think I think Roger and I both agree about that. But here's my issue. It doesn't make sense when you actually dissect the numbers and look at it. There's a lot more in there. There's a reason why Mississippi is getting $4.38 for every dollar they're paying federal taxes, and we're getting 33 cents back for every dollar in my district.
But you're getting more money on benefits. But you're getting more money on benefits. That's my point.
That does not make that. I know, but I understand. But that does not make up $4.38. I mean, I'll break down the math for you. And what's very clear is you've got other states that are moochers, and other states like mine that are paying way more into the center, and they're getting back.
Or
and now
they're
on top
saying
of
you're
this,
a moocher because you're getting all this benefit.
Or I would say, actually, this what's a clear tax hike bill is now adding on to what we're paying into the middle. And so I'll do the math for you and for everybody and show you that after this tax hike bill, how we're going to just get even more crushed in my state, and we're expected to pay even more.
Do the math. Go ahead.
Yeah, sure. So if you look at the $4.38, and if you break down the dollar, what you've got is a ton of money that's going in for things like roads, bridges, and other infrastructure projects that aren't going to our states. If you look at between New York and New Jersey, where we have clearly the Northeast corridor, as you know, which is a clear center of commerce in the country.
Yeah.
We've got roads and bridges that are literally falling apart, and we can't get a nickel back for the dollars we're paying in to fix those roads and bridges.
Right, but you're not mentioning the money you're getting for Social Security,
the
money that you're getting,
of course, all states
the money you're getting for veterans, retirement benefits. Look, I'm with you. I live in New York. My taxes will go up.
I think it's a clear, Maria,
that's
a red herring. It's a red herring.
Yeah.
It's a clear red herring. It's a piece of it, but there's Much more. There's much more waste that's going into these places, and it's ridiculous. We should cut the waste and actually make sure that we're getting a better return on investment.
It's funny that you say, look, I think we both agree, and you turn to Roger Williams, we both agree we're not going to touch Social Security. Roger Williams, you just said a second ago we need to cut spending. If you're not going to reform Social Security, what are you talking about in terms of cutting spending? Where are you going to cut spending? We know what's going on. We know all the growth in spending is in Social Security and the other benefits. So
well, there's a lot.
What are you saying?
There's no question about that, but we need to begin to start cutting something, for crying out loud. I mean, you know.
So what are you going to cut?
Well, look at. I mean, if you want to start talking about cuts, we need to look at every department. I mean, you can. I'm a 10th Amendment guy. Pass power to the states. Get government smaller. I think government should do three things: collect my taxes, defend my borders, help me with infrastructure, and then get out of the way and let this great engine of capitalism and Main Street begin to work. That's what we need to be doing, but we got to get serious about it, and we need to cut expenses, not raise expenses. And I'm excited, Marie, about this tax bill. This is going to be great. I'm a business person. Yeah. People are so excited out there about the chance of getting more money come January with less withholding. They're going to spend that money. We're a consumption-driven nation. It's going to be good for this country.
Yeah, but just let's not forget what Josh is saying here.
Not my state.
Basically saying, yeah, you are looking at a corporate tax cut that's going to be impactful, but partly you're paying for it by removing that state and local tax deduction, which will mean higher taxes for some people. Congressman Williams, are you comfortable with a corporate rate and a pass-through rate of 22%? Should it go that way?
Well, I've always been at 20%. I think corporate tax should be around 20%. So I want to stick with that. Again, we're talking about raising it to 21 or 22% to pay for something. The pay for should be the reduction in the size of federal government, not raising taxes. So 20% is a great rate. It will let corporations and people make more money, put more people to work, let them realize the American dream. Now, I will say 21 or 22% is not a deal breaker for me. It's much less than what we're paying now.
I'm worried about that. I'm worried about that $1.5 trillion deficit. I'm also worried about the fact that you're a cop and a teacher in Paramus, New Jersey. This bill, tax hike, will go up $5,000, Maria. Businesses are going to leave. I want to cut the corporate tax rate. That's my position.
Right.
But you can't also then load it up on our backs in Jersey.
I totally understand that.
And expect us to carry the bill. And your point, I get your point.
The first thing that Mr. Murphy did as soon as he won governor of New Jersey was just talk about his millionaire's tax. The first thing that he said. I know.
I don't think we should
now
raise
he doesn't want to do it because he's got to rethink it because he sees this deduction going away. But don't you think over time a plan like this, which removes this deduction, is going to correct some of these governors and state legislators that all they can do is raise taxes on the rich? I mean, maybe they need to start thinking about their state taxes, bringing them lower and pulling in the spending. Isn't this the kind of thing that's actually going to change that kind of behavior over time?
I think, of course, every single state's got to open their books and make sure we get more fiscally responsible, including my state. But you can't overnight flip the switch and suddenly say you can't deduct your property taxes, you can't deduct your state and local taxes.
So how do you do
because
it?
Home values will go down 10%.
How do you get these guys to say, oh, we better rethink this? Maybe a millionaire's tax is not such a good idea.
I think you already hear everyone saying we're going to rethink this, right? That's been the clear language. That's been the clear language. Of course we got to rethink this. We're facing now a huge tax hike from the federal government that's suddenly going to be on our backs, and we're going to have housing prices free fall. And what housing prices free fall, that puts a ton of pressure on local governments, and businesses will leave.
Yeah.
And people will be underwater in their homes.
You're right.
Right. Just watch the recessionary impact, and then you want to load up I don't understand how we keep ignoring the fact that this adds to the deficit and is going to pile on our national debt.
Oh, Congressman, let's be honest. President Obama doubled the debt in 8 years. I didn't hear a peep out of anybody when he was doubling the debt from $10 trillion to $20 trillion.
Should have talked to me. I was peeping. You were peeping.
Well, Maria, the best way to fix some of these states that have these issues is tell them to move to Texas. We got no personal income tax.
I know that. I think you're going to see an influx of people.
We're paying, by the way, because I'm paying for it. Yes, I got it.
Yes, well, look, there's no doubt we're going to see mobility here. People will leave these high-tax states. I agree. We'll see if it actually moves the needle on behavior here. Congressman, great conversation. Really appreciate both of you joining us this morning. We are talking about